Hi, I'm Scott Voak with Pacific Sotheby's International Realty, and today I want to talk about the San Diego real estate market over the first half of 2019 and project what I think is going to happen over the second half and into the fourth quarter. When we're done, please stay tuned for a message from Ken Reed, our sponsor with Finance of America. Welcome back. It's pretty easy to sum up the first half of 2019 in San Diego real estate. In the word, it was slow. Slower than we're used to. Fortunately, that didn't reflect in prices. Prices actually made a very nice recovery from the slump we saw at the end of 2018. And now at the end of June, we're actually sitting a couple percentage points higher, both for detached and attached housing, than we were at the peak last year. And we're actually sitting 4% above where we were this time last year. So all is looking good on the price front. The volume of sales is down a bit. 4% for detached housing and 9% for attached housing. Now, what's interesting is the number of homes for sale is up more in the attached market. I think this is strictly because interest rates are higher. Interest rates affect the bottom of the market a little more than they do at the top of the market where we see more cash buyers. So with higher interest rates, we're having fewer sales of the attached homes and there's more inventory. Focusing on North County, if we break it down into a coastal versus an inland market, coastal market is a little bit weaker, being higher price with the economy a little bit slower. We're seeing some resistance, whereas inland we're seeing prices rise a little bit faster, inventory be a little bit tighter. So if you've been looking for houses and you've noticed, hey, there's more deals on the coast, you're actually right. That's really what's been happening. Now, projecting forward through the second half and into the fourth quarter of 2019, I think interest rates are going to be very important. The Fed recently announced that they're going to be softening interest rates. Interestingly enough, what you immediately saw was rates jumped. Now, this was strictly because money is moving out of bonds and into the stock market. And so with less money there, the interest rates rose. But long term, what you're going to see as they bring down the federal funds rate, mortgage rates are going to have to follow because mortgages compete with the Fed and Treasury bills for investors' money. So as the Fed lowers rates, look for mortgage rates to drop. Now, that's going to be great for people in the real estate profession because I think we're going to see a lot more transactions. It's also going to be great for you owners who have been trapped in your home. A lot of the reason we have fewer sales right now is because you've got a 3.25% interest rate, and even though you've got a lot of equity because you bought 5 years ago, 4.25%, you can't buy a larger house. As those rates come down, 3.5%, 3.25%, we start seeing that again, which I think we will see, if not the fourth quarter, by early the first quarter next year. You will now have the freedom and the ability to step up and buy a larger home. And I think that's going to be great for families who are finding themselves squeezed. It's going to be great for the market, and it's also going to help our market boost up, and I think we'll see a little bit of an acceleration in values. So once again, the market's been slower. I think we have better things ahead. I'm Scott Voak. I really appreciate you watching my video. If you have anybody you know of who's looking to buy or sell real estate in North San Diego County, I'd love the opportunity to help them. And until next time, make it a great week. Welcome back. I'm Scott Voak, and I'm here with Ken Reed, Sales Manager for Finance of America, and he's graciously agreed to come on and give us some tips on mortgages. Ken, how you doing?
I'm great, Scott. Thank you so much. I'm happy to be here.
Well, I'm glad you're on board. Here we go. Let's start, because this is going to be the first of several videos, I hope we do. Let's start with the basics. First-time home buyers, what are, say, three most important things that you're looking for from a new buyer when they're going to buy a house and looking for a loan?
The three most important things that lenders are going to look at are credit,
Okay.
income, and assets.
And assets. Okay.